Welcome to those who've just joined us. My name is Michael Howden, your technical host for Barry Davidito's 60-minute session, CSA Fostering Control Awareness. For those who've not met Barry before, Barry Davidito has over 20 years' experience in fraud control and investigations. His experience covers a wide range of organizations in both the private and public sectors. He's undertaken fraud risk assessments and corruption reviews, prepared fraud control strategies, undertaken fraud detection audits, conducted ethics training, written codes of conduct and policy, and conducted and managed fraud and corruption investigations. He's a certified fraud examiner and a chartered accountant. He has a degree in commerce and accounting, a master in tax law, diplomas in government fraud control and investigations management, and an advanced diploma in government management. He's contributed to books on fraud, computer fraud, and communications, and has written a number of papers on fraud control related topics. We certainly have an expert with us today. Passing you over to Barry now. Barry, I'm opening your mic. Passing control to you.
Great, thank you.
Enjoy the session, everyone.
Hi everyone. Sorry, I've got a glitch here and that it says setting up event center again. Okay, anyway, welcome to the webinar. Interesting talking about internal controls, and one of them that was overlooked in this was giving the appropriate CV to the IIA. The one that they just used was the previous one, which was for a presentation I did on fraud. But anyway, that aside, sorry, I've just got a glitch on my screen. I'm just
jumping in here.
Event Center. So what we'll cover this afternoon is we'll have a look at different types of CSA and concentrate on facilitated CSA, because I think facilitated CSA is by far the most useful kind. So please ask questions, make comments as we go. Please don't wait until the end. Also, this is an AFZ and a jargon-free zone, so please note quickly if I use any terms that you're not familiar with. AFZ, by the way, is an acronym. It's one of my favorite acronyms. Comes from defense. It means an acronym-free zone. So in defense, they even have an acronym for not using acronyms. Okay, so what is CSA? To many people, CSA is meaningless TLA. TLA is my second favorite acronym, meaning three-letter acronym. So if we have a look at the definition, you can see CSA is its methodology encompassing self-assessment surveys and facilitated workshops for managers and internal auditors to collaborate in assessing and evaluating control processes. I guess why I kind of say CSA is a bit of a meaningless acronym is because everybody uses it in a different sense. So we'll look at a few of the main ways that people use it. It can be used as a sign-off, can be used for getting information, can be used as surveys, can be used in a wide range of things, and everyone typically calls whatever they do CSA. And so it becomes very confusing. But this is a reasonable definition this is based on the Institute of Internal Auditors definition, and it's fairly reasonably encompassing. And you can see from this, I guess, the benefit of CSA is essentially when you give an audit report, sometimes people accept it, sometimes they don't, sometimes a lot of argument, sometimes there's very little argument. It varies. The benefit of CSA, or control self-assessment, is that people don't argue with their own data. They're providing the data, so it's very difficult for them to say, you've got it wrong, because we're simply referring them back to what they told us. So it's their data, which makes it far more reliable. Okay, so if we start with CSA for sign-off, People, especially risk managers, use the term control self-assessment for a process whereby operational managers sign off that specific controls are operating properly. I guess there are two ways I've referred to risk managers, because typically this is built into a risk register where the control owner on a regular basis signs off that the control is operating effectively. So it's usually built into risk assessment methodologies. But it's also used, for example, where the chief executive has to sign off on a regular basis that the internal controls are operating effectively, typically with the annual report. So he or she requires other people to sign off. So there's, if you like, a shared accountability and a shared responsibility for it. So for sign-off, typically you have that sign-off regularly, that controls in the risk register assigned to them are operating properly. Also, it can be a sign-off that the internal controls in their area are working properly. In other words, it's not clearly aligned with the risk register. It's a more broad sign-off that the internal controls generally are working properly. And then you have the sign-off that listed internal controls are working properly. So you see these in, for example, financial institutions and organizations like that. But it's also widely used elsewhere, where people sign off, for example, that the cash is balanced on a daily basis, or stock is secured on a regular basis, or whatever the specific wording of the controls are. To make it work, it's essential that managers know what they're signing off. So managers need to know exactly what the controls are. They need to know what they need to do to assess if the controls are operating properly. They need to know how well is good enough. So I'll just finish the slide and then I'll talk to it a bit more. What to do in a timely manner if the controls are not operating properly. So if we go back to the first one. So managers need to know exactly what the controls are. For a start, what do we mean by controls? And often managers understand something very different to auditors. So they might have a much broader or a much narrower understanding of controls, and they might think of controls as a few limited things that they've got to do, whereas you might have a much wider expectation of that. So it's really important to explain what it is exactly that they're signing off on. Then the next thing is what they need to do to assess if the controls are operating properly. So are they just signing off that to the best of their knowledge it's working because nobody's reported that it hasn't, or have they actually been expected to check up and do some checks themselves and so on? And how well is good enough? If it's working half the time, is that okay or not? Is it working three quarters of the time? Is that adequate? Does it have to be working 100% of the time? What are your expectations? And a very important point is often they're told, yes, sign this off, but they're not told what to do if the controls aren't working properly. So it's if you want a decent system, you want to make sure that your managers really understand what actions they need to take if it's found that the controls aren't working properly. Of course, the other thing, if they don't know what to do with if they're not working properly, often the default then becomes, well, let's pretend they are and let's say they are. Okay, managers also need to know the accuracy of managers also need to know that the accuracy of their attestation will be audited. So in other words, if they're signing off, it increases the reliance of their sign-off if they know that you're going to be checking up on them. So that last part, that the checking will be audited, really does increase the reliability of the sign-off very, very dramatically. Another kind of CSA is CSA for surveys. So typically there are two kinds here. So the first kind is, it's more akin to internal control questionnaires or ICQs, which provide factual information, and as an auditor, typically you'll have used this a lot. And the other kind is where it's more akin to traditional surveys, and it provides more opinion type information. So, if you don't mind doing the survey very quickly, in our organization we use ICQs in our internal audit activities. A, very often; B, often; C, sometimes; D, never. So do you mind just giving a response to that fairly quickly, please? Okay, some interesting responses. So it seems as though it's not on your, I guess, most widely used audit techniques by the looks of it. Okay, so next one, CSA surveys for opinion. Survey results are A, very useful; B, generally useful; C, of limited value; or D, a waste of time. Now, if you haven't really used CSA surveys, don't respond, but respond if you have used CSA surveys, please. Okay, so it seems to be generally useful by the looks of the responses. And if you use CSA surveys, they can be really useful. What we recommend is facilitated CSA. Personally, I find that by far the most useful kind of CSA, and there are a number of reasons for that, which we'll go through. But pretty much the most important reason, or the greatest value of facilitated CSA, is you get the fundamental issues very, very quickly. So this is not a trick. Well, let's have a look at this. A, which would you rather do? A, slog your way through numerous transactions for 2 weeks, or B, ask people to tell you all the problem areas taking up a morning, or C, not answer because you think it's a trick question. And I'm guessing there'd be a lot of C's here because a lot of people think, nah, you can't get the real issues that quickly. The only way to do it is traditional audit work. I'm not knocking traditional audit work. It's very useful. It produces great results. But in our experience, facilitated CSA gets results that are just so much quicker and so much easier. So the benefits of facilitated CSA are that it's a fraction of the cost of traditional auditing, because, for example, you can have a workshop that takes a morning, and often we'll find that it produces the same results. You get the same findings as you would from, say, 2 weeks of traditional auditing. Secondly, its results should be at least as good as traditional auditing. If it's going well and you've established reasonable trust and rapport with the group that you're working with, you should get the same results as from traditional auditing at least. And the last point is that the results are often better than traditional auditing. And our experience is that typically the first and the third apply that it's a fraction of the cost of traditional auditing, and that typically your results are far, far better than traditional auditing. So the question is, how can I say that the results are better than traditional auditing? Well, because they often are. Because facilitated CSA better identifies the cultural issues, the soft controls, and the things that cause systems and processes to fail. And also because CSA identifies the elephants in the room. When we audit, often what we're good at finding is the traditional control weaknesses, such as segregation of duties problems, inadequate supervision, poor access controls, etc., etc. But what traditional auditing doesn't show as easily is things like the soft controls. And those, as I mentioned, are typically the things that cause processes to fail. And when you look at very large frauds and corrupt activities and so on, typically it's your soft controls that have failed that have allowed this to occur. So if you want me to prove that CSA is facilitated, CSA is so good, here are a few examples. So in one example, 2 weeks of traditional audit showed some minor control problems with procurement. So this was essentially a procurement audit. And a CSA workshop showed significant additional problems that the traditional audit work did not show. So let's look at specifics there. So in this particular audit, the traditional audit showed that orders were made out by people with the appropriate delegations. So that's all good. The delegations were being followed and all looked wonderful. A facilitated CSA session revealed that some people got others to place orders for them. Thus, you had blind ordering. So in other words, people were placing orders not knowing what the orders were because they were doing it for someone else. So they had no idea why the order was being placed or what it was going to be used for, if it really was for the organization, or if the person was going to use it for their personal, in other words, misappropriate the assets. So you had accountability missing because the system didn't record who the real person behind the order was. Segregation of duties disappears because of a number of things, including that the person who initiated the order or who wanted it placed might be the person who's signing off that the goods have been received and authorizing it and so on. So your traditional segregation of duties disappears, and fraud and errors are far, far more likely. But the point is that you could, as happened in this case, you could audit for 2 weeks looking at all of the orders or all of your selections, and you wouldn't see anything wrong because on the face of it they all look right. It's only when you have a facilitated workshop and you ask these detailed questions that you find out what really is going on. Another example was traditional audit showed that acquittal of receipts was properly evidenced. So in other words, when people received the items, the goods or services, they signed off in accordance with the system. So again, traditional audit, it all looked good. What we found when we, from the facilitated workshop, is that some people were acquitting receipts for others. So again, the acquittal is done blind because if you're signing off that the goods were received and you didn't actually receive them, you're doing it on the basis of somebody assuring you that it was received, or simply on the basis of, oh, look, it's Mary, we trust Mary, she's an honest person, so she would never lie, so therefore she said it was received, I can simply sign off on that basis, or she didn't say anything, but, she would have told me if it wasn't. So again, accountability is lost, you can have segregation of duties problems, all those kinds of things. Again, with facilitated CSA, there have been many other similar issues, none of which were shown in the traditional records or audits. And this includes things such as people placing the orders and whatever, but not really assessing are they needed. So, Fred comes to you and says, look, I need these things. And you say, yeah, that's fine, place an order and I'll authorize it. And Fred places an order and you authorize it without really knowing why Fred wants it or what it's needed for, and so on and so on. So it's only when you also speak to the people who are authorizing orders that you find out, well, they do know what the items are going to be used for, or no, they don't, or sometimes they've got a vague idea, sometimes it's not much more than that, and so on. The other concrete example, which was from an organization where they did concreting. So the audits repeatedly showed concreting teams had comparatively low productivity, but it was accepted as part of the idiosyncrasies of concreting. They said, yeah, well, that's the way concreting teams work. They real perfectionists, so they don't work as fast as maybe we would expect. But it's okay because they're really professional about the way they do the concreting. What the facilitated control self-assessment workshop revealed is that half days were common. So they actually they really only worked half a day. They'd set up their work processes that they were really only working half a day. And this was part of it, was concreting preparation was carefully done, because the way concreting works is you prepare it. In other words, if you're concreting a sidewalk, you dig up the sidewalk where you're going to be concreting. You typically do it the same day or the day before, but typically you do it the same day, because if you leave it open for too long, people are going to fall in, you're going to have accidents and so on. So you don't want to leave it open. So typically it's done the day that concrete is done, and it means you can't have the concrete delivered till this is done. So these guys were very smart in the way, well, smart from their perspective, smart in the way that they were having it done so that they didn't really have to spend the full day working. They'd start doing the preparation fairly late, and the concrete would be delivered late, so that it was too late then to start digging the preparing for the next lot of concreting, because it would only be half done. So pretty much they would disappear for the day. So they claimed that the concrete delivering issues, but essentially the issues were really caused by them. And another interesting thing that came out of it is they regarded themselves as concreters. And they said, we're concreters first, and employees of the council second. So they saw their allegiance to concreting and concreters rather than to the council, and the vast majority of them had jobs on the side as concreters, either carrying out their own business or doing it for other concrete businesses which did provided concreting services. And as I say, they had very little allegiance to the council, and that was one of the reasons why they were organizing their time so that they had so much spare time. I see this question here, which is a very, very intelligent question. Do you recommend performing facilitated CSAs and then target the traditional audit methods based on the results? And I guess it depends to a degree. There's a lot of value in doing that, because it means that when you do your traditional audit work, you're very focused on problem areas. You can also do it to give general assurance. I'm not saying CSA replaces traditional audit methods. It's something that I find very useful to use as well as. And sometimes you can do it when you're doing an audit, a traditional audit, and you're getting results that just don't make sense, or you're identifying problem areas. CSA workshops can be used to explore that in much greater detail. Sorry, there's another comment here. You need to decide on the applicability of the CSA. That's right, and it really is something that, as I say, it can be used at any stage of the audit. You can use it as your planning, as part of your planning, to better understand how things work in the area, and also where to focus before you do your audit program, where to place attention, what audit risks are coming to the fore versus which ones don't seem to be fairly significant, and so on. If you think of COSO, the Committee of Sponsoring Organizations of the Treadway Commission, the COSO control framework, what COSO says is one of your big areas that you need to focus on is a control environment. And your control environment, if you like, is the people carrying out controls and the way that the structures are implemented under which controls actually get carried out. And CSA is really brilliant at identifying those kinds of issues, the people issues, the management issues, the team issues, the staffing issues, whether people really care about their work, whether they know what they're doing, all those kinds of issues. That's where it's really exceptionally useful. And as I say, those are things that typically don't come out from traditional audit work. And here's a very, very good example of that. Again, from one of our audits, traditional audit work found out that when something went wrong, an alarm sounded, which showed that the system is working properly. So this was particularly in a work health safety area. But when we did a facilitated CSA workshop, we found out that because the alarm sounded over 60 times a day, nobody paid any attention to it. So again, the traditional audit work shows, yep, there is an alarm. It sounds when there's a problem, but it sounds 60 times a day, so therefore everyone ignores it. Another one which was really interesting, because this was in an organization where the handover is particularly serious from one shift to another, because there are a lot of safety implications. And when they do the handover, they're supposed to sign off essentially a checklist of safety issues. So the traditional audit work verified that at the shift changeover, both the new and leaving shift managers signed that the handover checks had been done. So looking at the evidence, you saw every time 2 signatures, and they were by the right people, so everything looked good. When we did the workshop, we found out that the handover checks were actually never done in practice, never ever done, because the leaving team wanted to leave and the arriving team wanted to get on with their work, so they both signed, but neither of them actually did the checks. So again, you know, very serious and very important finding. The other thing you get from CSA, as I mentioned before, is views of managers and staff and how they interact and all those kinds of things. And you often get some really good quotes. This is one of my favorites from a CSA workshop, where people in the team said, yeah, in our organization, managers are like clouds. When they go away, it's a nice day. So you can see from the comment, managers not necessarily regarded in the highest view by staff. Here's another interesting one we had in a retail organization, where the staff told us managers are entertained by suppliers on a regular basis. They wind and dine, so they have their lurks and perks, and we have ours. We take stock. So what that meant, what they were telling us, and we explored this, is they feel that managers are, if you like, doing the wrong thing and getting a benefit from the organization by being wined and dined by suppliers. So therefore, it's okay for staff to actually take stuff off the shelves. So really important finding for the organization, and really important in terms of what they needed to do to prevent staff theft, if you like, was simply change, or not simply, but a large part of it was changing the way that managers acted. So another big advantage of facilitated controlled self-assessment that I forgot to mention earlier, the improvements that you can recommend are usually significantly more effective and have greater benefits for the organization than under traditional auditing. And this is often because in a CSA workshop, you're working with the people there to say, well, what do we do? What do you think is the best way to go about it? And it's one of those, if you like, points of motivation that there's 3 basic principles of motivation that I saw this recently. I thought it was quite appropriate. That 1, you can't motivate people. You can't motivate other people. 2, all people are motivated. Some are sick one day of the week and late the other 4 days. And the point is they're motivated to be sick and late rather than healthy and on time. And that people do things for their own reasons, not yours. And when you're doing CSA workshops, people tell you what's going to motivate them. They tell you, if you like, what's motivating them to do the wrong thing. And by paying attention to that and taking account of it in your audit report, it means that it's very, very effective because it's real world and it's applicable. And one reason why internal auditors get criticized a lot is because we're seen as not finding the fundamental problems or making the real recommendations. And this is just clearly one way of doing so, getting to the real issues, making the real recommendations. And there's also something called the toothbrush effect, which is pretty much that we like our own toothbrushes and we don't want to use anyone else's. And ideas are like that people like their own ideas better than anyone else's ideas. And in CSA, you're getting their ideas about control improvements and so on, and you're, if you like, working with those ideas and giving them back. So that's all the kinds of things that you would have recommended anyway, but you've worked with the people in the session so that they're putting in their words what needs to be done, and usually that is what you want. So the results, if you like, the reports are far, far more effective, and they get implemented. And you don't get the disputes about, well, we don't think this or whatever, because it's their ideas and they came up with them, and typically they like them, they own them. So in other words, because you find the real fundamental problems instead of only scratching the surface, you can make the dramatic improvements that are more likely to work. And as I say, the report is typically not just saying, well, we didn't have segregation of duties over here, we need to improve it. The report is, why wasn't there segregation of duties? It's that because, well, again, Mary is the person who works there, and we all trust Mary. Everyone knows Mary would never do anything wrong. Therefore, we don't have to worry about segregation of duties because it's Mary. On the other hand, if Fred was in the area, Fred's an idiot and he's a crook, so we would never let him do both sides of the transaction. And it's those kinds of things that, if you like, if you look at the big frauds, and I don't want to go through a whole lot of them, but from Peter's Ice Cream, which pretty much almost cost the company its existence, to there have been a few lately, public and private sector, where, why did the frauds occur? It's because people who operated those controls were seen as superheroes and immensely trusted, and therefore nobody checked their work and they could get away with murder. And I'll give you another example. I did an audit recently of a particular area, and as part of the audit, typically you look at the risk register. And I think they'd put in this risk just for the sake of the auditors, but I thought it was pretty clever. I'll read it to you. I actually wrote it down. The risk was, we're at the mercy of our internal auditors who may abruptly change their views regarding internal control practices and blame us for it. This could severely adversely affect us. Now, as internal auditors, we'd stringently and strongly object to anything like that. We'd say we never do that, and so on. And the benefit of control self-assessment, facilitated CSA, is that you get rid of risks like that. You get rid of people saying, oh, why are you coming up with this now, and so on, because it's their views. They're taking ownership of the controls, of the recommendations, and so on. So, question now, do you now see that facilitated CSA can produce significant benefits at a very low cost, or that it remains, or do you remain committed to only traditional audit techniques, or do you think this has to be another trick question? Hopefully, I mean, can you see, just do it as a quick yes or no, can you see the benefits of facilitated CSA? Okay, well, thanks for that. I mean, I really think that, as I say, my experience has been facilitated CSA works. and it works dramatically. And in a lot of cases, we're consultants. We're called into an organization. We do traditional audit work. We do operational audits, compliance audits, all kinds of audits, as well as obviously fraud and corruption control type work and so on. But often when we've done a facilitated CSA workshop or a series of them, people will, managers, particularly senior managers, chief executive and so on, says to us, hold on, how come other people have done audits? We've been having audits done here in this area for 10 years, 15 years, 20 years, whatever it is, and they never identified these fundamental issues that you've identified from half-day workshop. And the point is that the workshops really have an interesting, if you like, psychology to them, in that one would expect, in a lot of cases, that people, when they're with their colleagues, are going to be very reluctant to say, this is a problem area or whatever, that they're going to be more inclined to say, oh no, everything's working fine. But what we actually find is that typically there are at least, let's say you've got a group of 10 people, there are at least maybe 2 or 3 who are not immensely happy about things that are going wrong, things that aren't being done properly, and so on. And 1 or 2 of them will speak up, and others take courage from that. And from 1 or 2 people speaking up, others take courage and they speak up a little bit more, and other people speak up a little bit more, and so on. And they really, you get more from having 10 people in a group talking to them than you would by going to the 10 people as individuals. And 10 people as individuals, often you're not necessarily asking the right questions. And that's even if you're following a control framework, a COSO framework, or a COCO framework, whatever framework it is. But you find that having people in a group, it initiates discussion. They say one thing, and it leads to them saying another thing, and so on and so on. And that without too much work on your part, this is the other great side of facilitated CSA, is that it's, once you've learned the techniques, the benefits are phenomenal because everybody's doing your work for you. And I'll claim I'm as hardworking as the next person, but the reality is I do have a bit of a lazy streak. And if people are volunteering to do my work for me, that's great. That's fantastic. I can quite happily go with that. And that's what happens in CSA workshops. So, for example, I did one recently where one of the guys said, oh, yeah, in this organization, well, the difference between our organization and a battery is that a battery's got a positive side. So the next person expanded on that, and then I could say, so what does this mean? What are the implications of that? And they would then came up with explaining how, well, we shortcut controls wherever possible, because why would you're not going to get rewarded for anything. Everybody's always going to shout at you. So why bother doing things well if you can do them at a minimum level? And that was a prevailing culture. And so it applied to the way they dealt with customers. It covered the way they carried out internal controls, the way they produced reports, etc., etc. I mean, another survey, and this has been similar survey results over a number of years, where this particular one, nearly 40% of workers reported that they feel that their job is on the line if they fail to cover up unethical behavior of their bosses. Now, that's really important, and typically that's a thing that will come out in a CSA workshop, which may or may not come out from other traditional audit questioning and so on. And the other part of CSA is every organization I've worked with has got this, where there are internal controls that people don't understand, they don't know why they're doing them, so they do them for the sake of it. And typically they become ineffective because people don't know why they're doing them. And CSA workshops, facilitated CSA workshops tend to highlight these and, expand on what the downside of it is. So very briefly, how does facilitated CSA workshops work? Or if you like, what's best practice? What we found is best practice is to use an internationally accepted control framework. So typically we use COSO or COCO. COSO being the American Committee of Sponsoring Organizations of the Tradeway Commission, as I mentioned before. It's a control framework. It's very, once you get beyond the report is insanely complex and boring. A lot of it is self-referential, and there are parts of it where if you really try and follow it through, you end up going in circles and your head will explode. If you kind of get over that, it really is, it's brilliant in that it's got the 5 components. Each component makes a lot of sense, and the basic questions that you're asking in COSO are really good questions. So the principles in COSO really are phenomenally good. And the same with COCO. COCO is the Canadian framework, and the Canadian framework is very simple and yet very comprehensive. It asks 4 basic questions. Your questions are: 1, do I know what to do? 2, do I want to do it? 3, do I have the resources to do it? 4, do I monitor it and learn to do it better? And those 4 questions cover pretty much everything. And you can apply that to an individual, a team, a branch, a division, an entire organization. So those are both frameworks that are very useful to use in facilitated CSA because they're structured. And when people say, well, why are you asking that particular question? The answer is, well, we're following the internationally accepted internal control framework, and that's one of the questions in that. So it really gives you a lot of credibility by following the framework. The other thing we recommend as best practice for CSA is using standard formats for the workshop. So, the standard format would include a mix of discussion topics. So typically, I guess the reason why you have discussion topics is if you ask people questions, which we like to do in a facilitated CSA. So let's say there's 20 to 40 questions, whatever it be, you decide on the number that works, and you give people a survey to fill out, and they fill it out anonymously so that nobody can see what they've answered. And you then collect these and annotate them, or you can annotate them, get the results electronically. Either way, paper or electronic doesn't really make a difference. But you see the results from your surveys immediately, and then you have that third part there of following up on unusual results. Why we recommend you have discussion topics first is if you don't have them, then people have got gripes, and people are proud of things that the particular team has done or the particular branch has done or whatever it is. And it's worthwhile covering those up front. That way you get them out the way, and then people will focus on the specific issues that you're bringing up. Otherwise, they tend to come back to the areas that they've done well and that they're very proud of, or alternatively, as I say, their gripes and their areas of focus which might not be what you want to proceed with. So as I say, I recommend a pretty structured approach. That's what we found works best. And then also using facilitation techniques to enhance the success of your workshops. So there are a number of these, and the Institute actually has a course in facilitated CSA where we go through these and we practice these, and by the time you go out, I'd suggest you're pretty good at running these kinds of workshops. But it's basic techniques, including, you know, paying attention to people's body language, paying attention to the words they use, encouraging groups to be positive, to allow everyone to speak, encouraging those kind of more introverted people to actually say what they feel and so on. So there are a number of techniques that are worth using, but even without those, you know, most people can conduct a facilitated CSA workshop without it. As I say, they do help, they're useful, but in any case, you can probably do it. Another thing with facilitated CSA is having rules of the workshop where you make it very clear, for example, that whatever is said in the workshop stays in the workshop. We don't put names next to comments. So, for example, it goes up on a screen, and it only stays on the screen if this is what the general consensus is. So if somebody says something that everyone else disagrees with, it doesn't go up on the screen, it gets taken out. Also, as I say, that everybody has the opportunity to be heard, and so on. So you have a number, typically 3 to 5 rules that apply to a workshop, and you go through those in detail before the workshop. The other kind of facilitated CSA is more, it's often referred to in the literature as facilitated control stroke risk assessments. And this is where I'm sure you've done these. A lot of people, a lot of internal auditors do these, for example, in the risk area, where you have a workshop of, let's say, 10 or 20 people who work in a particular area, and you're saying to them, okay, in order to achieve our objectives, what are the risks that might prevent us achieving those objectives? And you list the risks, and you go through them in detail with the controls that are there to mitigate each risk and so on. So again, if you want to make it work, things we've found that really do help the success of these kinds of workshops is make it simple. So make the workshop simple, but also, the next point as well, clearly define risk control in other terms. If people there have a different definition of control, for example, to what you do, you're going to have trouble. And also, related to that is proper descriptions of risk and controls recorded. So you don't want a control put down simply as segregation of duties. Because to somebody, a segregation of duties is that the people who work on the accounts receivable don't work on the accounts payable. They do everything on the accounts receivable, and other people do everything on the accounts payable, but as far as they're concerned, that's segregation of duties. You need to put down what the segregation of duties is, that it's people who handle cash don't also do the bank recon, or, you know, that kind of thing. So it's also, what do you mean by control? Do you just mean the hard controls, or do you mean the soft controls? You need to define that. What do you mean by risk? And this is where we recommend you make it very simple. So risk, for example, we'd say is, risk is anything that might prevent you achieving your objectives. So it's very simple. You don't have a complicated definition of a risk. And a control is anything that reduces that risk. So anything that mitigates that risk. So it includes a lot of soft controls, including training, motivation, supervision, all those kinds of things. And again, because of the definitions of risk and control and so on in the international standard and the COSO framework, etc., they're very much related to objectives. So we find that doing workshops like that relating to the specific objectives of the area does help focus it pretty well. And then the last point is really important, sticking to key issues only, because it's very easy for people to go off the track and, you know, just deal with minor issues, etc., etc. Now, we've got a bit of time left. Any questions or comments? Questions or comments from any kind of CSA that you might have done in your own organizations or that you've seen from other organizations. Just while we're I'll give you a minute or two to write any questions or comments, but I came across this a while back, but it's still one of my favorites, internal controls, is this actually won the award at an American legal conference for being the best warning on an item. And it was on drain cleaner. And the warning, this was printed on the bottle of drain cleaner. The warning was, amongst other things, and this was one of the warnings, if you do not understand or cannot read all directions, cautions, and warnings, do not use this product. And I love that because it's nonsensical. If they can't read the warning, then clearly, it doesn't apply. There was another one at the same conference where there was a fishing lure, which is, a fishing hook, a big fishing hook, and attached on the label that had various other warnings was an item which said, do not swallow. Now, you really kind of worry about those kinds of things. But again, in CSA, that's the kind of stuff that comes to the fore, is where you have these controls or whatever that people just have been doing, don't really know why they're doing what they're doing, or alternatively that they're supposed to be doing and are just ignoring because doesn't make sense, and they might still be signing off. So from your traditional audit, it appears that they are still doing the controls, but as I mentioned with that handover, they're simply not doing it. I don't see any questions or any comments. Is anything that I can expand on or explain in greater detail? Because this is it's a 2-day workshop that the Institute of Internal Auditors runs, and I'd seriously recommend going to the workshop. It's really worthwhile. But we've condensed parts of it into an hour, so we've necessarily gone very, very quickly through these. And so, any comments or any questions, now's the time to ask, kind of thing.
Barry, there is a question there. Can CSAs be formal and informal?
It's a good question, and yes, they can. CSA can be used, if you like, if there's a problem in an area. It's a good way of, if you like, getting the low-hanging fruit. So particularly if you know that an area is problematic, the branch or process or whatever that's problematic, holding if you like, an informal CSA in that area is really a great way of getting the fundamental problems and the fundamental issues. It can also be done where you use the same format, same questions and so on throughout the organization. So we've done these, both approaches, if you like, for organizations, and we found very, very good results. So it's something I'd seriously recommend. Consider adding this to your internal audit toolbox. You've got a lot of other techniques that are very good that you use, and this is just one more that, can get you a lot of results very quickly, very easily. And as I say, I really like it because everyone's doing the work for you and you're getting the credit, which is, not a bad way to go. And yeah, a very interesting question here. Do you see it as more as a second line tool or practice, or a third line? I see it as something that auditors use. So if you're kind of referring to in organizations, typically your first line is people carrying out the controls. The second area is, if you like, your second line is checking done by the area, where they might be doing their own questions their own internal audits, if you like, although it's really internal checking. I see facilitated control self-assessment as something done by internal auditors. as part of an internal audit process. And you could virtually add it to your, in the same way that you do analytic review, observation, and things like that. I think there's a lot of value in adding CSA facilitated control self-assessment workshops as well. So yes, I don't think it works as, or put it this way, sorry, I think you're going to get much better results, the internal auditor doing it, than the risk manager or the other areas doing it. I just think as an audit technique, it produces phenomenal results. If it's done by an area such as risk management, it has, I guess, if you like, it's useful, but I don't think it's as useful as the auditor doing it, because I see us as being more objective. I see us as having a broader view of the organization, and risk managers often, or sometimes, I should say sometimes rather than often, risk managers sometimes just have a risk management perspective, not a broader control perspective. So, as I said before, where facilitated control self-assessment is so useful, is that if you look, going back to the COSO framework, it helps you understand the control environment and identify issues in the control environment. In other words, the people carrying out the controls, the managers overseeing the controls, the structures that are set up in which controls occur, and so on. And typically risk managers are not as focused on those kinds of issues, or often they're not focused on them at all, whereas as internal auditors we are a lot more focused on that. I see, just glancing at my watch, that pretty much we're out of time. How are we going there, Michael?
We're right on 2 p.m. So we've got one last comment there from Carla. Rather than risk managers doing this, could be the compliance managers implement this if the organization consider it not in-depth or first line of defense enough for the internal auditors. There's one final comment. Did you want to comment to that before we close the session off?
Sure, that's fine. Look, compliance managers can, but often the compliance managers are not seen as independent enough or having a wide enough perspective as compared to internal auditors. So sometimes they're seen as, if you like, part of the process, not somebody that people in that area would necessarily open up to. So again, I would respectfully suggest it depends on the organization. Conceptually, there's no real reason why not. The compliance managers absolutely can do it, but you might not get results as substantial as you would with internal auditors. Other organizations, it might be that compliance managers can do it, would do it well, and would get good results. So I wouldn't say that they shouldn't do it. It's more a matter of what's appropriate for your organization. Thank you.
Thanks for that, Barry. All right, well, we've come to 2 minutes past 2, so we're pretty much on the hour there. Barry, I just want to say thank you for presenting today presenting today. Certainly a very interesting topic. And thank you everyone for attending today. Most appreciate that you popped into the session during your lunch break. Some thanks coming through there, some great questions as well. Guys, as you leave the session, there is a feedback form that pops up when you close down the session. Just click the X in the top right-hand corner and it will take you to that feedback form. Great feedback for the Institute of Internal Auditors and also great feedback for Barry as well. Thanks everyone for attending. My name is Michael Howden, and I will see you next time in an Institute of Internal Audit session real soon. Till then, enjoy the rest of the week.